When you can actually see your profit for the year in dollars and cents, it gets you more in the notion of selling corn, knowing that I can lock in a $50,000 profit or whatever the profit is. You want to lock it in. If I know I can make that much profit in a year, I will be in business next year.
Good afternoon, welcome to GrainTV. My name is Cody Bills, Logan Burgess. Today is Monday the 13th, and we had the market moving higher here today. Now, especially when you take a look at the Friday trade session after the WASDE report was released, we were trading off pretty sharply there, and it seemed like we had a little bit of momentum to the downside going into the weekend. Today, we snapped back. Let's take a look at the market, see where we closed here through the Fire Tip trading platform. Corn for July delivery trading up 19 1/4 cents. Soybeans up 20 1/4 cents. Wheat in Chicago trading up 5 1/2, and Kansas City wheat trading up only 7 3/4. One of the things that came out today was planting progress. Yep. It was highly anticipated. The numbers are definitely going to have an impact here on prices going forward. Yep. Logan, maybe you could walk us through what we're seeing and what we expect.
Yeah, you know, in general, the traders expecting to see 29% of this corn crop planted. We missed that by just 1% here this afternoon. 28% reported planted. Take a look here at the model that we've been tracking throughout the planting season. You can see here the red line is this year's pace, the black line is the 10-year average, and the green line here is the pace that we saw in 2012. So as you can see, well behind where we expect to see it at this year. On average, we'd expect around 70% of this crop already planted. Just 28% reported planted here this morning. And this is an important week here in the planting season. We mark this here with this yellow line. This is kind of our benchmark week here. We look back at a lot of historical data, and when you look at this week, in terms of what percentage of the corn crop is planted, it has a pretty good relationship with how much planted acreage we see at the end of the growing season from the USDA. Bottom line right here, looking at the planting progress that we're looking at now, we're well below 40% where you'd expect a 2% reduction in acreage. Not sure if we're going to go and see 2% lower in acreage, but bottom line, the numbers that we saw on Friday from the USDA, I think it's going to be really hard to see 97.3 million acres of corn planted, and certainly it should support the market here a little bit in the near term as we get through planting. But I know you and I were talking a little bit about it before the show. There's certainly some concerning demand side factors that we saw in Friday's numbers.
Yeah, and you know, when you look at that May 12th week, you know, this is kind of an area, you know, it's an area, and if we really see an opportunity to get out and plant here in the next week, and we make a huge step forward, it may kind of mitigate some of that as well. What are you seeing for opportunities? Will we have any opportunity to get out in the field and make some serious progress?
Yeah, absolutely. It looks like here over the next week there should be a pretty good planting window, I guess, to continue across much of the Corn Belt. You know, bottom line, we're going to need it. Right now, only seeing 28% planted, certainly well behind where we would like to see it at this year, and that planting window is really going to have to be maintained here if we are going to see the acreage numbers that the USDA outlined in Friday in that WASDE report.
Yeah, absolutely. And, you know, let's just switch some gears here. When we talk about Friday's WASDE report, you know, we obviously had a negative price reaction to the numbers once they were released. But when you look at old crop, really, the numbers weren't too surprising. They didn't come out. They didn't deviate too much from analyst expectations. A lot of what we're paying attention to is new crop, and particularly the demand side numbers. You know, we're obviously going to have, or at least from where we stand now, without knowing exactly the weather throughout the growing season, you know, we're looking on paper at a significantly sized crop. And of course, we're also seeing feed and residual numbers up. We're seeing ethanol numbers significantly higher. Do you think those are achievable numbers? Can the U.S. achieve feed and residual increases of 20%?
You know, I think it certainly is doable, but we're going to need to see the price of corn come down quite substantially. I don't think 540 new crop corn in December is really going to spur the kind of growth on the demand side that the USDA has projected. We know right now with ethanol we're facing the blending wall, so you know, if we're blending a lot more, or if we're producing a lot more ethanol, is there necessarily a market for it if we're at the blending wall? In terms of feed usage here, we've seen feed usage take quite a hit just over the last several months, and it takes a while to rebuild the herd size, I guess, particularly for cattle. So that's one area that a lot of people are going to be looking at closely. And I think bottom line, with the numbers that the USDA put out on Friday, that's not assuming 540 on new crop corn. That's assuming a much lower price and ultimately seeing those end users come in and buy it. Bottom line, I guess, right now, looking at the market, any rallies that we see here, I think it wouldn't be a bad idea to use that as a pricing opportunity. Certainly, if we remember last year, we know that at some point, if we don't get moisture, we're going to see a big run, but that might be a place to pick up a call and have that kind of sitting on the sideline, not necessarily putting all your eggs in the weather market basket, I guess, if you could say that.
Yeah, and I think you're spot on, Logan. You know, when you look at the 2013-14 crop forecasts here, the projections, it definitely has a bearish implication to prices. And if you're holding on, waiting for a weather scare during July, during pollination, you know that's it's a very risky play. And I think if you're going to be conservative this year, I think it is worthwhile to look out in the cash market, see what you're seeing for pricing opportunities, maybe use some futures contracts to hedge if it's right for you. I'd recommend speaking to a broker about that. And of course, you know, you can always do a little bit safer play and go long options where you have a more defined risk opportunity there. The bottom line here is that pretty much wraps up this show. And if you have any questions about what we talked about today, you can give us a call at 877-472-4607. You can visit us on Facebook. You can follow us on Twitter. Thanks a lot, and we'll see you tomorrow.